All right, so it is Sunday. The market's just open, and today's topic is going to be how to use market correlation with supply and demand zones. Okay, so as of right now, you can see that I've already drawn my zones. We have a supply zone, and then we have the demand zones that are in green and the supply zones in red. Okay, so now I'm going to use the 4-hour chart because if you're a swing trader, you're typically going to be using a 4-hour chart or maybe even as low as the 1 hour. And if you're a day trader, you might also use the 4-hour time frame, but you would use a smaller time frame, like a 15-minute, to enter on the 4-hour supply zones for a sell and to enter on the 4-hour supply zones, 4-hour demand zones for a buy. Okay, so now when we're talking about market correlation, what we're looking at right now is the Euro USD and the USD Swiss franc. Now, the reason we have these two is because these two currency pairs are negatively correlated. Now, what is negatively correlated? So, when a currency pair is negatively correlated to another, that means that those two currency pairs trade in opposite directions. So, let me show you what I mean by that. You see the Euro USD on this side, and you see prices going down, touching the demand zone. You would buy here and you would exit somewhere for a 1-to-1 or 2-to-1. Now, if the Euro USD is negatively correlated to the USD Swiss franc, then you should see the USD Swiss franc going into a supply zone and then falling down. So we look at the USD Swiss franc and we see prices just opposite the Euro USD. Prices rally up, hit a supply zone, and now it's falling down. And currently, as of right now, we have the markets just opened up and we see a bullish candle on the US Swiss franc and we see a bearish candle on the Euro USD. So that's more evidence of negative correlation. All right. So now why do you need to know this? let me tell you something. Professionals know the difference between every currency pair. Okay. Now, especially if they're negatively correlated, that stops them from, or that prevents them from getting long on a position and long on another position. And with those two currency pairs being negatively correlated, that would mean that one will get stopped out and one might work out. So they kind of like cancel out each other. Okay. Now, when it comes to the news that come out, if you wanna, let's say you wanna trade a news event, what you would do is you would see that you would look at the Euro USD and you would see what news events are coming out. And let's say there's a news event coming out and then it releases at 8 o'clock in the morning. Or for this example, let's just say the market's just opened up and the news for the Euro USD is positive. So that means that prices are gonna, from this base, prices is gonna rally up. That would tell you exactly what to do on the US Swiss franc. This base will end up being a breakout to the downside and it will hit this demand, okay, and then this will hit this supply. All right, now if you didn't know about market correlation before you watch this video, that should tell you you have a lot to learn. Okay, and if you want to know how I drew these zones, then the very last video that I post will show you exactly how I like to draw supply and demand zones, because supply and demand zones are very subjective when it comes to um, the zones. But all in all, supply and demand traders typically are picking the highest probability turning points. Okay, so with that being said, that is the video I have for you guys today. Now, if it's your first time to my channel, you can subscribe. I post videos every single day. Monday I have trade reviews. Tuesdays I try to go live with as many people as I can. And if there's nobody inside that chat room or that live room, I'm still going to be trading live, available to answer all the questions you have and so forth. Throughout the rest of the week, there'll be a whole lot, a whole lot of other videos. So with that being said, try to use this to your advantage. Watch this video at least twice, because I'm pretty sure when you listen to it the second or third time, you're going to see that you missed something very important. Okay. With that being said, I'm going to check you guys later, and I hope you guys do a really good job trading.